Welcome to the new session of World Miner. I'm Ola Johannes Lind, the CEO of World Miner. You are all invited to access our platform, install our application, become part of our community. Follow World Miner on our social media, X, Instagram, Facebook, YouTube, and Medium. Don't forget to visit our website, worldminer.io, where you will see and learn more about our project, and you can join by downloading our application for either Apple or Google Android phones. If you're interested to become a member of our Telegram communities, you can join any of our channels, World Miner Global, World Miner Brazil, or World Miner Bulgaria. As World Miner, we believe that blockchain mining should not be a privilege of the few, and everyone should have the access to its benefits. In this new future digital economy, regardless of location or wealth, everyone should have the equal opportunities to participate and gain. We think that only together we can move towards a more inclusive, sustainable, and transparent future. And that is the reason why World Miner strategically works with WorldCoin to shape the future of cryptocurrency together, aiming to address regulatory gaps in the WorldCoin global market within OpenAI's grand vision to enhance its reach and influence. We trust in the market potential of our coin, ATM, which was developed to provide computing power. It can help fill the gaps that was left by WorldCoin, offering a substantial market opportunity. Users can acquire computing power at a low cost, earn returns from both WorldCoin and World Miner. World Miner and WorldCoin, both aimed at OpenAI's core initiatives, has both developed a robust cryptocurrency financial ecosystem. The market education, promotion, and technical support are top tier, demonstrating strong capabilities. World Miner addresses the biometric policy barrier that is faced by WorldCoin in its global expansion by offering an unrestricted registration and participation platform for users across multiple countries. This move injects new momentum into WorldCoin's market value growth. With World Miner's global promotion, both WorldCoin and ATM values are expected to rise. World Miner introduces a staking mining model that eliminates the need for expensive equipment. Users can stake a certain number of tokens to receive computing power allocation, enabling participation in mining and earning rewards. So compared to traditional mining, staking mining significantly lowers the entry barriers and reduces the costs. The ATM token, positioned alongside WorldCoin, is currently undervalued. However, with this expansion of the project and the increased applications, the token price is expected to rise substantially, offering strong potential. World Miner provides not only basic staking mining returns, but also offer additional rewards through various incentive programs and activities. So by participating in staking reward programs and computing power competitions on the platform, users can earn extra returns, further boosting their gains. So join World Miner today to shape your financial digital future. Today's topic: AI robo-advisors. All robot advisors, often referred to as robo-advisors, are digital platforms that provide automated algorithm-driven financial planning services with minimum human intervention. These systems typically gather information from clients about the financial situation and future goals, online surveys, and then use that data to offer advice or automatically invest clients' assets. So the development of robo-advisor represents a significant shift in the financial service industry. Introduce a more accessible, cost-effective, and scalable model for managing wealth. So this technology leverages artificial intelligence, machine learning, and big data analytics to enhance the way investment advice is provided, making it available to a broader audience, including those who traditionally may not have the access to financial advisory services. So let's explore this topic. and see the future outlook of AI robot advisors. So in context, historically, it started to get traction in the early 2000s, but it really started to flourish after the 2008 global financial crisis. Because during that period, many individuals were disillusionized with traditional financial advisors due to conflict of interest, lack of transparency, and high fees. So in response to fintech's company saw an opportunity to offer a more democratic, low-cost alternative to traditional wealth management through automation. The first robo-advisor, Betterment, that was launched in 2008, its goal was to simplify investing by offering a fully automated service that required little interaction from clients. Then, following Betterment, other players entered the market. There was Wealthfront and Personal Capital. These platforms catered primarily to retail investors with a focus of passive investment strategies. So the rise of this platform marked a major shift in the investment landscape. Traditional advisory services had typically been available only to high-net individuals, now had a low-cost tech-driven alternative accessible to nearly everyone. This democratization and investment advice was facilitated by advances in artificial intelligence, which made it possible to offer personalized advice to millions of users at scale. Amazing. At the core of robo-advisors is a combination of AI algorithms, machine learning models, and data analytics. So these technologies work together, process this large amount of data, interpret user preferences, and make investment decisions. And here's a breakdown how they function. Data collections and analysis. The robo-advisors typically start by collecting financial information about users through questionnaires. This information includes personal details such as the age, income, financial goals, the risk tolerance, time horizons, and investment preferences. After the data is collected, is then creating a customized investment portfolio suited to that user's profile. So risk profiling. The algorithm analyzes the user's responses and assigns them at a risk score, which helps determine the appropriate asset allocation. The system may use machine learning to assess how different users' profiles historically behaved and adjust the risk score accordingly. After the risk profile is established, the robo-advisors automatically allocate funds to various asset classes, typically focus on low-cost exchange-traded funds, ETFs. The allocation might include domestic and international equities, bonds or commodities, or real estate. Artificial intelligence plays a crucial role in rebalancing these portfolios periodically to maintain the desired asset mix. And one cool thing with the future AI-driven robo-advisors is their tax loss harvesting, where the system identifies opportunities to sell losing investments to offset gains, thereby reducing the client's taxable income. The AI algorithms are continuously optimizing portfolios for tax efficiency, which is an area where human advisors may struggle to match robo-advisors' efficiency at scale. The automated rebalancing. Over time, market conditions and individual investments cause a portfolio assets allocation to drift from its target. The AI-powered robo-advisors then rebalance the portfolios automatically when they detect deviations. And this process ensures that the portfolio remains aligned with the client's goal and risk tolerance always. Some robo-advisors today also employ natural language processing techniques to offer a more human-like experience, allowing users to ask questions in plain language and receive comprehensible advice. The NLP tools, the natural language processing tools, enable these platforms to interpret clients' queries and provide responses in a conversational format. As machine learning models accumulate more data, they improve their predictions about market trends, customer behavior, and optimal investment strategies. That allows the robo-advisors to continuously refine their advice and provide more accurate financial planning. Unlike traditional static financial models, robo-advisors use machine learning algorithms to identify patterns in user behavior and market performance. That allows for dynamic customization of investment strategies over time. And the cost efficiency, that is some of the benefits of robo-advisors. And that's the most significant benefit, is this affordability. Traditional financial advisors typically charge fees ranging from 1 to 2% of assets under management, AUM, while robo-advisors generally charge lower fees, maybe around 0.25 to 0.5 of assets under management. So this fee reduction is possible because of the optimization and scalability that the artificial intelligence brings to the process. And the accessibility, because the robo-advisors lower the barriers to entry for investment services. They require relatively low minimum balances compared to traditional advisors, which makes them more accessible to younger or less wealthy individuals. And some platform has no minimum deposit required at all. And the transparency. Most robo-advisors offer users a clear explanation of their investment strategies, fees, and performance. The optimization involved in the process also eliminates the potential for conflicts of interest that can occur with human advisors. And the clients benefit from the ease of use, as this platform automates tasks such as portfolio management, tax optimization, and rebalancing. User can set it and forget it, with the confidence that the AI-driven system is managing their investments according to the predefined goals. And the consistent performance. Robo-advisors, who often follow passive investment strategies, tend to offer steady and reliable performance over time. While they may not guarantee market-beating returns, they aim to provide returns in the line broad market indexes, such as the S&P 500. The scalability. AI enables robo-advisors to serve an unlimited number of clients without the need to expand their workforce. This scalability makes it possible to offer that personalized financial advice to millions of users worldwide at a very low cost. And the objective decision-making, because the robo-advisors rely on algorithms and data, they are free from human biases, such as emotional investing, overconfidence, or favoritism towards particular stocks or funds. So it leads to a more rational and objective decision-making. So what are the limitations then? Well, while robo-advisors are excellent for users with straightforward financial goals, they may not be able to handle more complex situations like estate planning, tax strategies for business owners, or specialized investment advice for high net worth individuals. But traditional advisors can provide tailored solutions in these cases. Some users prefer the comfort of human advisors, especially during times of market turbulence. Robo-advisors do not offer the same emotional reassurance or personal explanations that a human advisor might provide. And the limitations of the algorithms. The success of robo-advisors largely depend on the quality of the algorithm and the data it uses. In rapidly changing or volatile market conditions, an algorithm that is overly reliant on historical data may struggle to adapt quickly. And the responsibility for errors. As with automated systems, there is the potential for technical glitches or algorithmic errors. If the AI misinterprets data or executes trades incorrectly, clients may experience financial losses, and determining responsibility for such mistakes can be complex. And many robo-advisors adopt passive investment strategies. That means often invest in index funds that track the market. While it's generally a sound strategy, it may not provide the opportunity for more active investment strategies that is aimed to outperform the market. So use cases. Retail investors. AI-powered robo-advisors are especially popular among retail investors who have less capital but want to participate in the stock market. That can offer basic financial planning, portfolio management, and wealth building tools at a low cost. The millennials and digital natives younger generation, specifically millennials, are more comfortable using technology to manage their finances. Robo-advisor appeal to this demographic, which value transparency, low fees, and convenience. Many robo-advisors provide tools for retirement planning, helping users determine how much they need to save and which type of retirement accounts to use. High-income earners who are looking for tax-efficient investment strategies can also benefit from robo-advisors' tax loss harvesting capabilities. And this feature allows clients to reduce tax burden in a way that may be difficult for them to do manually. Robo-advisors is also gaining traction in international markets where financial advisory services are less mature. In that or these countries, they have had less access to the traditional advisors. The AI-driven platforms can provide a solution to bridge the gap between individuals and more sophisticated financial advice. So, the future of AI robo-advisors looks promising as advancement in artificial intelligence, machine learning, and big data analytics continues to push the boundaries of what these platforms can really perform. Here are some key trends that may shape the future of AI-driven financial advisory services. That is integration of hybrid models. To address the limitation of fully automated platforms, many robo-advisors are introducing hybrid models that combines AI-driven services with human financial advisors. This allows clients to access automated portfolio management while still having the option to consult with a human advisor. The personalization through AI. As machine learning algorithms become more advanced, robo-advisor will likely become better in delivering high personalized financial advice. So instead of relying solely on user input data, future systems may analyze broader data sets, such as spending habits, social media activity, and lifestyle patterns to create even a more tailored investment strategy. As the fintech landscape evolves, robo-advisors may expand their services to include alternative investments like cryptocurrency, private equity, real estate, etc. AI system can help users diversify their portfolios by integrating a wide variety of asset classes into their investment strategies. In financial coaching, future robo-advisor may go beyond simple management investment to evolve into comprehensive financial coaches that could provide advice on debt management, budgeting, saving for large purchases, or even insurance, creating a more holistic approach to financial wellness. Blockchain technology could enhance the transparency and security of robo-advisor by ensuring that the transactions are recorded immutably. Additionally, smart contracts could be used to automate various financial arrangements or agreements, further streamlining that investment process. And future robo-advisor may integrate real-time data feeds and sophisticated predictive algorithms to even react even more quickly to market changes, making that investment decision in milliseconds to capitalize on short-term market opportunities. So, an article that was published this year is in paymentsjournal.com discussed this discussion. Its title was AI-powered financial advisors may impact wealth management industry. AI clearly has a critical role in wealth management industry, says Greg O'Gara, the lead wealth management analyst at Javelin Strategy and Research. However, deployment and adaptation of AI tools and business model will reach an equilibrium falling into two main segments, self-directed investor and hybrid AI advisory relationship. Portfolio pilot falls into the former. It says the caveat that many self-directed investors also use a financial advisor. Hybrid AI advisory combines the AI tools like generative AI with human expertise. It empowers investors with advanced tools and provides advisors with resources like predictive AI for scenario analysis, reporting, financial planning, and client workflow management. While Portfolio Pilot is demonstrating solid growth, it will face increasing competition from advertising models that creates a human backstop. For autonomous technology, O'Gara said, moreover, investment portfolios are only a piece of larger financial data which demands long-term financial planning. The interconnection of these advisory pieces, include estate planning, that is complex. But it's a booming industry, and it dominates namely in US by Morgan Stanley and Bank of America. I mean, Morgan Stanley alone has 4.4 trillion under assets management. So you can see it's a market that is going to be flooded with great innovative opportunities, like, for example, World Miner, in that sense of mining in the crypto space. But there are still some regulatory hurdles that automated financial advisor platforms need to overcome. Ultimately, AI as a self-directed investment tool will challenge these adversary platforms. But the challenge may not only serve to a greater client's engagement, and it will force advisors to demonstrate their value. Advisors who fail to adapt would be hard-pressed to stay in business as incumbent AI challenges rises. So this comes to World Miner. World Miner, that has that innovative staking mining platform that combines AI, blockchain technology, and the robotics of doing your staking and mining. The systems allows various staking options depending on your budget. So what is staking? Staking is the process of locking cryptocurrency assets for a predetermined amount of time in order to support a blockchain's operation. Staking your cryptocurrency earns you additional cryptocurrency. Many blockchains use proof of stake, where users stake predetermined amounts of cryptocurrency to support the blockchain by confirming fresh transactions and to generate new blocks. In World Miner, you enjoy 4 different staking mining methods. The one that starts the process is dual coin mining, where you're utilizing as your principal USDT and the seed token from World Miner in a 70% ratio USDT and 30% ratio SAM token. And the minimum threshold is only 100 USDT in total for the principal. That principal will generate every 24 hours an output reward either in WorldCoin, not either, actually in both WorldCoin and World Miner coins in the same ratio, 70% WorldCoin, 30% ratio World Miner. And that daily output will come directly into your wallet. And there is 4 different modalities where you start small and grow. The first one, the small one, is that gives you 0.7% daily output. That is 7 days only. And the minimum requirement is 70 USDT and 30 SAM tokens. And it gives you 0.7% daily output. The other option is 30 days. And that gives you 1% daily output. The third choice is 90 days. That gives you 1.2% daily output of WorldCoin and World Miner. And the last option is 180 days. That gives you 1.5% daily output of your principal staking in World Miner and WorldCoin tokens, 30-70% as said. It gives you a great potential, and suddenly staking 2 coins, you have now created 4 coins. And it's important to remember that after your staking period is over, you can select to get all of your principal back or to use the same principal for a new staking. And this methodology applies to any staking in the platform. After staking and received World Miner tokens, you can now go to part 2. That is ATM mining. And that is the second staking mining method in our platform. Here you utilize the wealth miner generated from the dual coin mining, and you stake it to generate ATM coins. That gives you ATM coins in 1% daily profit output for a lockup period of 10 days. An ATM is one of wealth miners' coins that you can trade freely on the secondary market. Third option, liquidity mining. And that is a very interesting model because there you can stake either WorldCoin or ATM, or both if you prefer. You get a 1.5% daily profit of the same coin you stake. If you stake WorldCoin, you will get 1.5% WorldCoin on a daily basis for the 10 days you stake, or ATM. But the interesting part is after you decide to restake again, the same principle after 10 days, the platform will grant you another 0.5% extra for the following period. And this restaking process can be done until you reach a maximum of 5% daily output reward. Bear in mind that the accumulated output percentage in this method is bound to each independent staking process that you started. And our last staking method is Easy Earn, where you stake either WorldCoin or World Miner coins, or both. You lock them up only for a 24-hour period and you will receive 0.7% daily output profit. So you can see there is pretty interesting staking gains here, both from traditional and virtual markets. So install the World Miner application today, begin your successful and profitable journey with World Miner. So we come to the conclusion of today's interesting topic. AI robot advisors, or robo-advisors, have revolutionized the financial service industry by offering an affordable, accessible, and efficient way to manage investment. So by harnessing the power of AI, machine learning, and the big data, this platform can provide personalized financial advice at scale. However, while robo-advisors offer numerous benefits, they also have limitations, particularly in handling complex financial situations or providing that human reassurance during market downturns or turmoils. But as technology continues to advance, we can expect robo-advisors to become even more sophisticated, offering highly personalized financial strategies, expanding into new asset classes, and to incorporate hybrid models that combines the best of AI and human expertise. So in the long run, the AI-driven financial services has the potential to democratize wealth management on a global scale, providing millions of individuals with the tools they need to secure their financial future. And that concludes our topic for today. I would like to thank you everybody for joining, and I hope to see you in our next session. I am Ola Johannes Lind, the CEO, World Miner. Have a good one and see you soon.